to Tradespoon in the Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a live trading room open to trade stock and options using our strategy roundtable. Let's talk about current market conditions. Robert asked about inverse ETF. So I don't like to use leveraged ETFs. A lot of people use triple, TQs, right? I don't like them because they are, this is the other way around. Well, this is leverage and there is inverse triple leverage, inverse triple average, QQQ, what is it? SQQ, I forgot. SQQ, sorry. Makes sense. SQQ, hello. So obviously, SQQ, but you can see it, the way the value is calculated, right? I usually do not recommend triple leverage ETFs. I mean, if you want to use, you just can buy more PSQ. PSQ is, 1-to-1, right? QQQ is down 4%, PSQ is up 4%. So it's very easy. So PSQ, and if you want spiders, SH, right? They're 1-to-1. There's no underlying options because how do you get triple leverage? You have to buy futures, you have to buy options, they settle, and that's where you lose, value and premium. So I would stay away from triple leverage ETF. I would either buy puts or put spreads if you want to hedge your portfolio, or you can buy SH or PSQ, right? Robert, thank you for the question. Any other questions? All right, Cornelio, Dini, Dan, Ricardo, Robert, Therese, how are you? Perfect. So in terms of, well, we talked about this. I mean, the question on everybody's mind, where's the bottom, right? China retaliated, United States imposed tariff, China retaliated over the weekend. Two scenarios, right? Either, let's say, European Union is gonna retaliate, or South Korea will say, we're gonna start building factories in Tennessee, right, or Texas. If it's South Korea building factories in Tennessee, market is extremely sold off, you will have a huge rally, right? Similar rally on magnitude than spiders. If you don't have, right, if you have, let's say, negative news, let's say European Union start retaliates, most likely we're gonna continue sell-off, at least to the 5,000 level, right, at least to the 5,000 level. Right now, we are retesting August lows. We're right at the August lows of 24, so we gave up all of the gains since, basically March of 24, right? Previous rally. We're actually below that level. So now, if the 512, most likely it's 5. I would concentrate on the 5,000 strike right now. And where the question of the bottom, usually you look for signs of a bottoming process, right? So VIX is 40 above, it was actually at 45, right? These are good signs of some kind of a panic, right? Dislocations, right? We haven't had a VIX at 45 basically since, pandemic, right? Since pandemic of 2020. Even in 2022 recession, I don't think we got to 40, I think, but we never got above 40. So today we're above the previous recession, fear. So that's usually signs of that capitulation is approaching, right? It's not there. Volume, weekly volume, not there yet, right? It's definitely record volume in 24, but let's say 23 sell-off, we're still not there. But those are the signs of capitulation. But again, usually signs of capitulation or bottoming when you don't have any sellers left. Like today, we have a lot of sellers left. But when you see bad news, like let's say if South Korea imposes tariffs and nobody's selling, that's a sign that the bottom is there. Or you have some kind of positive news, right? South Korea or I don't know, Vietnam is going to start building in, in New York or Tennessee, then you have a rebound. But until then, Until then, you don't know where the bottom is. I mean, I can look at the technical indicators. I can kind of see, like my opinion, there's a huge gamma at 5,000. It's been there for a long time. So I don't think we're going to break 5,000 by, at least until April 17th, on April expiration, because most of these contracts are in April concentration. So up until April, I think 5,000 will hold, right? So maybe as we approach in 5,000 or 500 S&P, start thinking about maybe it makes sense to start buying. Spiders is down 15%, QQQ is down 20%. Any questions? So now QQQ, but for now it's in kind of free fall, and I think we're trading in the wave C, right? We talked about wave A, right? So we did have a wave A. We had a not the greatest rebound, but shallow rebound, got close to 50-day moving average, right? And then now we're trading in wave C, and actually it's equidistant, right? This is a 10% correction. This is a 10% correction. So I think either today or Monday, Tuesday, something positive is going to happen, or we're just going to run out of sellers, and we will start having some kind of a bounce, right? That wave either something like this, or more likely than not, something like this, right? And we have wave, this is A, B, C, then we have D, and then we have E. Right, wave E. So that's, I think, my core scenario, right? My core scenario that we're close to the bottom, not bottom, but we're close to that end of wave C. Then you have a rebound, maybe to 550. That's what used to be a support. Largest gamma that we had was at 5, when on spiders it was 500. 550, sorry, 550. So we have a very large position at 550. Now we have a very large position at 500. And I think that's the range, at least until there is a clarity in the market, right? We're either going to break above 550 if dust settles and there's clarity, or if the clarity doesn't come soon, then somewhere between 500 and 480 is your support. That's the previous bull market, right? So I think we're trading in this range between 550 and 480, and then at some point we're either going to break down if things gets worse below 480, like bear market, right? Or if things get better, let's say earnings season is coming, right? We have April expiration, any positive news, and then we're back to 560, 580. So that would be my thought process. But until clarity, we're trading somewhere between 550 and either 500 or 480. Any questions? In terms of signs of like where VIX 40, 45, I think that's a good sign, right? That's we're close to the capitulation. I mean, obviously sentiment is all-time low or multi-decade low. Everybody's bearish, so that's usually a good contrarian indicator. Spiders is approaching that 500 level. That's a good indication. And then what else? I do like to look at the stocks, which has been a very good kind of where capitulation. So if you look at the 20-day percent of stock at 20-day moving average, we're not there, but very close to 2024 low, very close to 2023 low, 24 low, very, very close to 22 low, 20 lows. So any type of bear market or strong pullback, at least initial pullback, pauses at that 10 to 15%. We're at 19%. So that's encouraging, right? And then percentage of stocks above 200-day moving average. We're not there yet, but we're close to 23 low, right? Within a few percentage points, right? I think if the spiders gets to 500, we'll probably get to that 25% of stocks above 200-day moving average. In 2022 recession, we were at 15%, so we're not there yet, right? So that's another good indication of how many sellers are left, right? Uh, if you have access to margin calls, once people gonna get a lot of margin calls letters from their broker dealers, that's usually a good sign that the bottom is, we're approaching the bottom. Any other questions? Another encouraging sign, at least for now, I don't know how long it's going to last, but Bitcoin is actually turning positive, right? It kind of led the market to the downside. It was the first one to roll over, not counting semiconductors, but it's at least in the past few days, or weeks, it's not making new lows, right? And Bitcoin usually is a proxy for risk taken and panic. So that's another encouraging sign. Obviously, crude oil, is in free fall. Japan is in free fall. Europe is in free fall. Nvidia is in free fall. Copper, sharp reversal on copper prices in free fall. Germany, European Union, even gold is pulling back, right? What else is interesting? VIX, let's see, are anything in green? So people are hiding in treasuries, right? So treasuries, high quality bonds, those are positive. That's good. Some municipal bonds, people hiding in municipal bonds, but everywhere else it's just basically signs of panic. This is close enough to the panic. Yeah, I don't see anything except Bitcoin and GameStop. Okay, GameStop is positive. Well, it's a Bitcoin. What was that other Bitcoin stock? I'm drawing blank. But okay, so Bitcoin and Bitcoin related stocks are catching a bid. MicroStrategy, thank you. I have a brain freeze. Okay, MicroStrategy, I mean, doesn't look very good, but I guess better than most of the stocks. Ricardo, thank you. What are else signs? What are the any positive news? I mean, I think sell-off is gonna probably end either no sellers left or some kind of a clarity in terms of where we're heading. Because I was talking about in the live trading room, my understanding that the way the tariffs are calculated by the new administration is kind of a misrepresentation of what the tariffs actually are. The way they calculate it, they just look at the imbalance between imports and exports, and they said, okay, South Korea charges us 90%, we're going to be charging them 45%. South Korea is not charging United States 90% tariffs. It's just that's the imbalance. That's how they calculate it. So South Korea cannot decrease their tariffs on United States, right? Nor can they ask their citizens to buy more US products. That's also is not going to happen. The only thing that can happen, they can say, listen, we're going to move some of our manufacturing to the United States, right? Or we can maybe buy soybeans, instead of Brazil, we're going to buy soybeans from, United States, right? Kind of like China did in previous administration, but some kind of a compromise, right? Similar to previous administration. Last time we had these tariffs in 2018, right? In 2018, 2019. Obviously, the magnitude of the tariffs is much higher than it is now. And I don't know if it's going to be the same solution as last time, but I guess we'll see. But it takes time, right? It takes time for the countries to negotiate and see, who's going to blink first. Some of the books, that I do recommend well, first of all, keep a journal, right? If you go back to 2016, 2018, when we had tariffs, and if you have a journal, then you can go back and kind of see how the market reacted to the previous tariffs negotiations. Prospect theory is important, right? So I encourage you to, if you're not familiar with this concept, just read up on it, right? Prospect theory. Daniel Kahneman, he got a Nobel Prize for macroeconomic and behavioral economics. Loss aversion, right? Right now, our losses feels a lot worse than the gains, right? So because of that, we tend to kind of use self-serving bias to convince that, make decision based on emotions, right? Or based on, self-serving bias or hindsight bias. So you want at least to recognize that these biases exist, and more often than not, we make these decisions. So prospect theory is important. Here's a great book called Thinking in Small Bets. It's not thinking fast, thinking slow, by Daniel Kahneman. If you haven't read this book, I encourage you to read the book. Basically, it says that we operate in two modes. We make decisions in two modes, fast and slow. System one, system two. System one is more of our emotional, right? We make decisions based on emotions, based on biases. That kind of what helped us survive historically. And system two is more methodical, right? We keep a journal, we have a trading plan, we look at different indicators, and we wait till end of the day. And so it's a slow, more methodical approach. So first step is, again, to recognize that you do make decisions in system one or system two, right? And then I always kind of ask myself, am I making this decision based on system one or system two? If I see it in system one, then maybe I need to switch to system two, right? Kind of learn how to switch. How do you switch from one system to another? It's keeping a journal, keeping trading plan, writing down your rules, have a checklist, right? Pre-trading checklist that says, okay, how many positions do I have? What is my position size? How much cash do I have? Right? Those are the important part that can engage your system too. And that's why I always encourage subscribers to keep a journal, because journal will force your mind, activate your frontal cortex, right? So when you write down the rules, or when you write down in a journal, that's what makes you make decision in the system too. Obviously, sometimes you have to make decision system one to survive, right? Using your emotional centers, but at least you need to be self-aware. So prospect theory is important, and thinking fast, thinking slow. No, sorry, and thinking in small bets. So thinking in bets, the same thing. Any questions? All right, what else? Um, so in terms of trading plan, I would encourage you to, let's go back to some of the rules, right? The idea of the economy of control, right? The idea of the economy of control is, no, we have a lot of people today. BJ, welcome back. Cornelia, Denis, Don, Ed, Joseph, Kevin, Ricardo, RJ, Robert, Therese. Perfect, thank you. Idea of the economy of control is that try not to predict what China will do, or when it will do, right, or what United States will do, because those things are outside of your control. Try to concentrate on things that are within your control, such as cash, position size, and number of positions. Because if you get the position size correctly, this is a great opportunity, right? If you believe that American is not gonna, the new administration doesn't want the recession, global recession, and this is just a at least a short-term reset of the rules or negotiation techniques, whatever you think it is, right? That could be an opportunity. If you get the position size correctly, you can start, you might not be able to catch the bottom, but market is down 20%, you buy, right? Average recession, like at least shallow recession, somewhere between 20 to 30%, right? Obviously, in deep recession, like financial crisis, it could be 40%, right? 45%. But assuming you don't have a deep recession and the economy is doing good and AI is alive and well, it's usually 20 to 30% pullback. We already have 20. So you might as well start buying at 20 and then buy at 30. But the only way you can do it if you have cash, right? You have cash. So the economy of control is important. Concentrating on things that are within your control, not what new administration will do or how China will retaliate. Positive and negative visualization, right? Positive and negative visualization are important. Kind of going through the journal, write down the rules. What are some of the rules? And the goal is to avoid fight or flight, right? When the market is down 20%, you do not want to be panicking, right? You want to kind of be in control. So the only way to avoid it is again position sizing. So right, so cash. Number one rule is cash. I would propose to have 30% portfolio in cash. If you think like I am thinking, right? If you agree that listen, this is a very large position, right? We're talking about if you look at the gamma, $30 billion worth of gamma in SPX put contracts, right? These are all mostly is put contracts. If you think this level will hold at least till April 17th, I'm looking at the April 17th. Actually, let's look at May. What are people trying to do in May? So same thing. So May, April contracts, there's a lot of 5,000 level puts. And if you say this is as good as, this level will hold, obviously this is a time to start thinking about buying, not selling, right? The market likely to reverse. While TLT is rising sharply, emerging market bonds funds are falling. Because emerging market bonds funds are very high risk, BJ, right? Especially with China. The reason they're falling because China, right? There's a sharp pullback in China on this retaliation war, right? Down 10%. That means emerging market is down, 6%. That means anything to how they're gonna service this debt, right? And a lot of these companies are, vulnerable. This is not high quality. These are not Apples and Microsoft of the worlds. So that's why they're fallen. But treasuries, TLT treasuries, people have high confidence in U.S. government paying off their debt, but they don't have high confidence in Vietnam or China paying off their debt, especially if these tariffs are going to get worse before they get better. Any other questions? BJ, thank you for the question. So I mean, TLT is obviously rising. and you can see, I would keep an eye on interest rates, right? Interest rates and junk bonds. There's a very sharp pullback in junk bonds, right? So you already start seeing dislocation in the bond market, right? And 10-year yield also, on its way to September 24 lows, right? So it's already close to 24 lows, right? I mean, it's not that far away from 23 lows, right? But these are all signs of recession, right? Goldman Sachs came out 40% probability of recession. JP Morgan came out 60% probability of recession. So all of that is gold is holding up, right? This is a good proxy for recession. I mean, it's down, right? Reversal on a huge volume. I think people are going to start taking profits, or they're on margin calls, because when you're on margin call, you have to liquidate. It doesn't matter if it's gold or silver or anything like that, right? So usually the best place, I mean, it is gold, but the gold is extremely overbought, but treasury extremely oversold, right? Since 22, obviously TLT got annihilated. So, if we head into global recession, then TLT is going to do well. All right, any other questions? All right, any other questions from today? So right now I would wait for two things. Either on the negative news, market is not selling off, right? China retaliated with 30%, market is down 4%. If European Union retaliates with 30%, then and market is down, then you wait, right? Or I think you see signs that positive news. Somebody is kind of folding their cards, whether it's China or Canada or Mexico or European Union, but somebody's saying, okay, we treated you unfairly for all these decades. We get the message. We're gonna do better, right? We're gonna either move our manufacturing to the United States, create jobs in the United States, invest into U.S. economy, right? I mean, I don't think anybody's gonna lower tariffs, right? Because they can't lower their tariffs. Most countries, they're already low, but we'll see, right? And I would watch this level, right? Personally, I think this is the time. We're not that far away. This is the time to start thinking about buying versus SPX. I mean, we were already 511, right? So we're maybe 2% away from that big support bounce. So maybe either end of day today, but start thinking about maybe buying. All right, any other questions? Fallen Ocean draw. Yeah, so all the currencies, they're gonna fall, right, because of the uncertainty. All right, any other questions? All right, if there are no questions, then that's all I have for today. Thank you very much and have a great day.